Time now for the business news with Stephen Carroll. Good to see you, Stephen.
Hi, Delano.
GameStop is back in the news. The shares once again skyrocketing.
That's right, shares in the video game retailer jumping towards the end of trading on Wall Street yesterday. So much so they had to be halted on the stock exchange twice. It's not exactly clear what sparked the sudden rally, although GameStop's chief financial officer announced that he was leaving the company on Tuesday. Posters on the website Reddit's Wall Street Bets forum have been celebrating the news. The message board was central to the last rally in GameStop shares in January. Now, at the end of trading on Wednesday, shares in the company were up over 100%. They're currently expected to jump again when Wall Street starts trading in a couple of hours' time. This jump not quite reaching the previous heights for the share price, though. In January, GameStop shares went to as high as $347. They've been hovering around $50 since the start of February, bouncing now to the level of around $90.
Switching gears next, the German chemical giant Bayer is reporting major losses for 2020.
The company lost €10.5 billion last year, mainly due to the cost of legal settlements over its weed killer Roundup. In June, it reached a deal worth almost €8 billion to settle the bulk of some 100,000 claims in the United States about the product causing cancer. Bayer's annual sales were largely unchanged last year.
And not great news for financial news for my favourite airline, Qantas.
No, we know that 2020 was a particularly bad year for airlines. Qantas, no exception to that. The company stopped almost all international flights in June of last year because of Australia's strict rules on travel during the coronavirus pandemic. The airline's CEO now says he doesn't see international travel resuming until October. Camille Nedelec has the story.
Revenues nosedived at Australian carrier Qantas as the pandemic and border closures shut down international travel. The airline's earnings dropped by €4.5 billion in 6 months and over €7 billion for the whole year. For the second half of 2020, it reported losses of almost €1 billion. A harsh reality facing airlines everywhere, but Qantas was particularly hard hit.
Just considering the trading conditions we had to deal with in the half explains why these numbers are so dramatic. Border closures meant we lost virtually 100% of our international flying and 70% of our domestic flying.
The airline now says it's not expecting international flights to resume until late October of this year. But Qantas does expect to be back up to 60% of pre-COVID domestic capacity by the end of March and 80% by the end of June. The one bit of good news, more people shopping online boosted the company's freight business, meaning Qantas International saw profits worth over €30 million in the second half of 2020. Qantas has already made massive cuts to cope with the crisis, with 8,500 jobs being axed last year, while another 7,500 will remain on furlough until international travel starts up again.
Some more of the day's business headlines for you next. Sales for the world's largest brewer dropped by less than expected last year. AB InBev, which owns brands including Budweiser and Stella Artois, says like-for-like sales were down by just under 4%. Profits, though, down by a third to $5 billion for the year. The owner of clothing retailer Primark says it lost the equivalent of €1.3 billion due to lockdown closures over the 6 months to the end of February. AB Foods is planning to reopen around 80% of its stores by the end of April as restrictions are eased in various countries around Europe. The company's hoping to sell hundreds of millions of euros worth of clothes that it still has in stock from last year. And profits at the French aerospace and defence giant Safran plunged by more than 50% in 2020. The company builds plane engines for Airbus and Boeing, and earnings at its civil aviation division were down by more than 40%. Safran is expecting activity to pick up in the second half of 2021.
Stephen, in the United States, President Joe Biden has announced a plan to tackle the shortage of microchips.
The President is asking Congress for $37 billion in funding for this program. He made the announcement as part of a review into how the US is supplied with 4 key products. Joe Biden wants to avoid a repeat of shortages experienced during the height of the pandemic.
Build more in America to avoid being caught out by shortages. Joe Biden's executive order aims to reduce imports of key goods and avoid a repeat of the supply issues the country saw in 2020. Americans, he says, should never face shortages of goods they rely on.
This is about making sure the United States can meet every challenge we face in this new era. Pandemics, but also in defense, cybersecurity, climate change, and so much more.
The president has ordered a government study on how the US is supplied with semiconductor microchips, medicines, electric vehicle batteries, and rare earth minerals. This as US automakers struggle with a shortage of the chips, forcing General Motors and Ford to curb production. The problem is set to cost them at least $1 billion in lost earnings. Biden now wants Congress to approve some $37 billion to fund the manufacture of semiconductors in the United States. A push to manufacture more in America has rare bipartisan support.
Really, this has to do with our ability to maintain our ability to defend ourselves and to compete with China. They're a serial stealer of our intellectual property, and we have to defend ourselves and we have to compete. That's what this is all about.
Rerouting the country's supply chains will be expensive and difficult. For goods that can't be produced at home, the White House wants to work with partner countries that they say share American values.
Let's take a look at what's happening on the markets for you next. And it's a mixed picture on European bourses this lunchtime. London and Paris seeing small gains. Frankfurt trading in the red. Just a look at some of those companies that we were just telling you about their results. Shares in Safran down 3% after their latest results. AB InBev investors not too pleased either with the results from the brewer. Their shares down 5%.
Finally, from you, Stephen, new figures have been released on how the pandemic has affected workers over in New York, in the arts particularly.
Yeah, that's right. Employment in arts and recreation in New York City fell by 2/3 in 2020, making it the worst hit sector of the city's economy. That's according to a new report from the State Comptroller's office there. Now, Broadway theatres were shut down in March of last year, which accounted for many of the job losses. They still don't have a date for reopening there either. Of course, very worrying for people who work in that sector. Now, across the whole arts and recreation industry, employment fell from nearly 90,000 in February of last year to just 34,000 in April. The Whitney Museum, the latest to announce job cuts, another 15 staff losing their jobs there. That's on top of cuts that were announced last year. This is a hugely important area of the New York City economy as well. So getting that back to business is going to be a real challenge for city authorities when, of course, the health situation allows.
Indeed, and there's no end in sight, so it's really frustrating for people working in the arts and people who enjoy the arts too. Stephen, thank you very much for that. Stephen Carroll there with today's business news. More news coming up after a quick break. Stay with us. This is France 24.